Imagine you are worth $50 billion, but barely taking a salary, no massive paycheck, no constant selling of stocks, and yet somehow you still live in mansions, you fly private jets, and you spend millions freely. So where does that money actually come from? Well, the answer is surprisingly simple. It's debt. Billionaires aren't rich in cash. When we hear that someone like Elon Musk or Jeff Bezos is worth tens or even hundreds of billions of dollars, many people imagine giant bank accounts full of cash. But that's usually not how wealth works at that level. Most billionaires hold the majority of their wealth in assets such as company shares, real estate, investments, or ownership stakes. So for example, if a founder owns 10% of a massive company, their net worth may rise by billions simply because the stock price increased. But technically, they haven't received any cash yet. Their wealth exists mostly on paper, and that creates an interesting problem. Selling creates taxes. If billionaires want to spend money, they could simply sell some shares. But selling creates a taxable event. Imagine buying shares years ago for $10 million, and today those shares are worth $2 billion. If you sell them, well, the government may tax part of those gains heavily. And there's some other issue. When the major shareholders sell a large amount of stocks, the market sometimes panics. People may think, why is the founder selling? Do they know something bad? And that can hurt the stock price significantly. So instead of selling assets, many wealthy individuals borrow against them. And that's the loan strategy. A billionaire can go to a bank and say, hey, I own billions in highly valuable stocks. Please use them as collateral and lend me money. Collateral basically means security for the bank. If the borrower fails to repay the loan, the bank can take some of the asset. For banks, this is often considered very safe because the borrower already owns enormous wealth. As a result, billionaires can sometimes borrow money at surprisingly low interest rates. And this changes everything, because loans are generally not considered taxable income. That means someone can access huge amount of cash without technically earning income in the traditional sense. So, while an average employee earns a salary, pays income taxes, and spends what remains, the ultra-wealthy may instead keep their assets invested, borrow against them, and avoid selling. And while they are borrowing, their investments may continue to rise in value. So if their wealth grows faster than the loan interest, they can actually become richer over time despite having this debt. So for most people, debt is something super stressful. Credit cards, loans, repayments. But at the highest level of wealth, debt often works differently. The average person borrows because they need money. The ultra-rich often borrow because they already have money. And understanding that difference helps explaining how modern finance really works.